good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me will be Ajay Sharma, and we'll be discussing how the last 1 hour of the trading session will pan out, because for now it's not been anything to be enthused by. The Nifty is in the red right now. So after opening a bit soft, it has continued to do so. Not a major momentum there. So 24,300 at the index level. Small cap, which was outperforming last week, has also given up right now. So that too is in the red right now. So all of these sectors and indices coming under pressure. Talking about sectors, you have interesting themes working out today. So of course, railways is one pack which is seeing quite a bit of action. So in IRCON and RVNL and IRFC, these are some of the names which have been holding well in the trading session. So that entire PSU basket is doing okay. And then of course FMCG, with the kind of updates that we've got from the likes of Dabur, Marico, etc., those stocks have managed to hold up quite okay. And clearly the street is expecting good update to come from GCPL as well, because Godrej Consumers too is sitting with a gain of around 4%. Not just that, even the heavyweight ITC has actually managed to make a move. That stock is up a good 2%, and that's one of the top contributors to the Nifty right now. In fact, apart from ITC, Reliance is also inched up 1%. So that's adding almost 20-25 points on the upside for the markets right now. ONGC has had a great run, 5% up move on ONGC, while Titan continues to be the lacking point per se, because Titan is not glittering today. It's down almost 4% in the trading session. But we'll discuss that and all more with our guests on the show. We have Naresh Mirani, Kunal Bothra, as well as Andrew Holland joining us on the show. Andrew, let me begin by asking you, the date of the budget was out, July 23rd, but it doesn't seem so that it started any, fresh rally per se in the markets. Are you anticipating that pre-budget rally this time around, or do you think, the stocks have already run up quite a bit, the expectations have already been built up already?
I think it's the latter. I think the market had a great run after the the election results and the initial kind of weakness. So the banking and the IT stocks led the way. What I think could happen now is that the market might be held up, and we might just have a push higher towards the budget, with other sectors like FMCG, probably helping to kind of push the market higher. On the basis that there could be more kind of government spending to help the rural economy, and therefore that would have knock-on effects on other kind of areas as well, like affordable housing finance companies. So these are the sectors which could help the rally. Given that we've had a pretty strong run for two of the big sectors, which is IT and banking, in the very short run. So I wouldn't expect a big up move from here, but I think we could see a bit more of a rally towards the budget.
Andrew, the markets seem to be looking for areas which may not have done very well, provide comfort of non-performance, if I can call it, like consumer, but with sparks of green shoots, like we saw some in the quarter gone by. If you add a dash of budget tilt, there's a pretty trade sitting out there. Is that the kind of way people are looking at the consumer space?
Yeah, no, I think that's it. I think you've nailed it in terms of that's the trade. If any sectors kind of has a kind of the momentum kind of moving forward in terms of what expectations are moving towards in the budget, and more spending to get the rural economy going, and of course the monsoons are proving quite okay. So I think that would be the trade that you would look at. But on a more sustainable basis, I still like within that consumer basket is the beverage sector, because I think you're buying into the premiumization story, which will have many years to run. But I think all of the consumer stocks will probably have a run ahead of the budget.
What are your thoughts on power sector financiers? While the valuations of renewable financier like IREDA are questionable now after 6x returns in almost 6 months, but PFC, REC, that pocket has a very robust business model with not so stretched valuation. How are you playing this space, the power financiers?
We're kind of trading them more. We like the power sector overall because we do feel. And what you've said is that the government will continue to spend money. It's a global factor on renewables, and of course, given the power deficit that we have in India, we're going to see a lot more orders. We think, particularly on the wind side of the power order frames. So I think the power finance companies are going to have to be there to help kind of get the financing going. So I think I would play more the longer term power companies, and probably kind of trade the financing companies.
Point taken. So that's the view as far as the power sector is concerned. But just wanted to highlight some of these gas plays. ONGC has been doing quite well for itself. Right now, it's sitting with a gain of 5%. And there's a further rally that has happened in the last few minutes. You also have GAIL, which has managed to see quite a bit of traction. So that stock is also sitting at the highest point of the trading session. And look at that sudden spike that has happened on GAIL as well. A sizable move. And in fact, even those gas ancillaries and users and RCF, in fact, for that matter, which do use part of these gases and other stuff as their raw material and power, usage, etc. Those stocks have also managed to see quite a bit of rally. So RCF is up 7%. FACT is the other one that will come up for you on screen. So some of these fertilizer companies, which are part of the ecosystem, are also seeing quite a bit of rally. Kunal, from these four names that I talked about, GAIL, ONGC, RCF, FACT, which are the stocks or charts which are which are showing the maximum amount of strength?
So ONGC is something which we discussed in the morning. Also, I'd recommended a buy because my expectation was that the stock is coming out of almost like a 30-pointer consolidation. So 290 approximately was the breakout point for ONGC. It's done pretty well, climbed up another 15 points from those 290 levels, which means potentially another 15 points could be in the offing on the upside for ONGC. So that should take the stock towards 320-ish, on a shorter term basis. And out of the other names which you mentioned, FACT is also something which has come back into a breakout mode. So it's a very high beta stock, and I've seen the historical patterns where the stock moved up almost 50% to even 100% in a matter of few weeks when the momentum is exceptionally strong. And then when the stock gets into a correction phase, it's a very mild kind of a correction on a relative basis. So I think it's coming back into a breakout mode. Volumes coming back over the last couple of days. 1,000 is a support being held on to broadly for FACT. So that's another name to look out for.
In fact, I want to also talk to you about power value chain for a moment beyond the financiers, Andrew, especially the power cable story. Up till now, the focus on the power cable side was real estate led or consumer kind of powers, RR cables and polycabs of the world. But now the word is that because of such a massive thrust on power generation, the high kVA power cable story could also come out. People are talking about underground cable policy of the government, and basically retrieving power from Ladakh of the world, from renewable, and bring it to the consumer here. Do you have do you play the power cable story anyway in your portfolios?
No, we haven't actually, and I'd like to see the government wordings first before starting to take that kind of a view. So no, we haven't played the cable side of it.
Point taken. So those are some of the power cable companies. In the meantime, I also want to put the spotlight on what Nuvama is saying on CGD. So they are saying MGL will maintain a buy, hike target price to 1957. IGL as well, they've hiked the target price, and some of these stocks are reacting right now. Let's pull up MGL, IGL. They are at the highest point of the trading session. They're building in that Freedom 125 factor to the entire city gas distribution network, because they say that CNG total cost of ownership is going to be less, and the bike can add 5 to 13% to CNG volumes by 2030, and that's one of the reasons perhaps some of these stocks are buzzing around in the trading session. But apart from that, railway as a theme has been doing fairly well. I want to play a soundbite of the conversation we had with Mr. Vinayak Chatterjee earlier. He of course is one guy who's had a lot of consultations with the government, and he advises a lot of companies plus the government as to what the need of the infrastructure is, and he believes that this time around there's going to be a major push coming in for railways versus roads. Listen into that soundbite and we'll take forward the discussion with Andrew as well.
One of the big beneficiaries is going to be all the industries who are associated with providing goods and services to the energy sector. Obviously, steel and cement is a no-brainer because, they constitute the bulk of infra on the construction side. I personally feel that this year, there is going to be a higher emphasis on allocation to railways over historical roads. Roads for the last 2.5 decades has ruled the infrastructure roost by garnering the significant portion of the budgetary allocations. roads have now reached a level of maturity. And I think the signals are coming through pretty clearly that railways might just overtake road in terms of allocations. Now, that has very serious positive implications for people who are involved in supplies of goods and services to the railway establishment. Not just electrification, but coaches, wagons, lines, safety equipment across the board. So I will highlight for you that, in my view, the sectors that are linked to electrical, green energy, and the sectors that are linked to railways are likely to see a disproportionate increase in their business.
Word coming in from Vinayak Chatterjee that the area to watch out for would be railways, and disproportionate focus this budget could be on the railway space. Andrew, I'll come back to you in a minute. There's a very interesting story which my colleague Sharad brings in, that there could be a national common gold rate. Now, big HNIs and everybody, we all Indians have a fancy towards gold, but the prices actually vary on ground, state to state, supplier to supplier. Sharad, what do you carry?
Well, yes, sources to ET now have stated that there might be one nation, one rate for gold. And as per the sources, most of the big jewelers in the country across the bandwidth from east to west, north to south have actually agreed upon this. Now, interestingly, GJC, which is the Gem & Jewellery Corporation, they have taken the opinion from all the big jewelers when it comes to the one nation, one rate for gold. Now, most of them have agreed for a single rate going ahead across the country itself. And importantly, there is a brainstorming is happening on the problems associated with this concept. Now, it's likely that the announcement might be made in the September meeting itself, and there come and entire opinions are being actually formulated, especially on eliminating the challenges from this segment. Now, what happens with this segment, which is called ONOR, basically one nation, one rate for gold. Now, importantly, there's an increased transparency and fairness coming in, and more efficient markets will come up, and once the markets turn efficient, then the arbitrage opportunities also become less. Also, a potential price reduction could be there, and interestingly, there would be a level playing field when it comes to all the jewelers. So, very interesting concept coming in when it comes to all the big jewelers and eventually the mid-side and the small-side jewelers when it comes to the one nation, one rate for gold.
Okay, that's an interesting one. One nation, one rate. Definitely one can see the logic for that. Whether it happens or not is something we'll have to track. But time now to slip into a very short break. Don't go anywhere. We'll see you right on the other side in a matter of a couple of minutes.
Kaustav Pavaskar from Sher Khan is now joining us to share his opinion on consumer stocks. Pull up all the consumer gainers, FMCG gainers in trade. Kaustav, they may be moving up in kind of a tandem today, but actually last quarter onwards the commentary started changing, tilting towards the favor. Now expectations also building in that government's effort to spark up demand in rural India, tier 2, tier 3 may also benefit this pack. On valuation terms, which are the kind of ideas which you are most bullish on?
So there are a couple of things. One is on valuation front. Second is who will benefit large with the recovery in the rural markets. Certain FMCG stocks have not done well in past, 1.5 years. So Dabur, HUL, Marico, these stocks have started seeing a momentum in the recent times when there were news like monsoons are going to be good this year. And though it is a late start, we have seen that monsoons are well spread out, and there are news or prediction that whatever the deficit we have seen, it will get covered up in the coming months. So that augurs well for the rural India. Second important thing is that government is expected to provide incentivize the rural economy to improve the consumption. So we have already seen it has started with welfare scheme, then there was increase in the MSPs, and now it is expected that in budget further boost would be given. So we should expect rural growth to improve from the current level. Large part of it will be seen in the second half of the year, and that will drive the overall volume growth for the consumer good companies, and it will help also earning growth to be better. So in that context, there are certain companies like Dabur India, Imami, Marico, HUL, who would be one of the key beneficiaries of the improvement in the rural India. Also, companies like Britannia will also see. We have already seen the volume growth recovery. I think from here also we should expect the volume growth momentum to sustain. So these are some of the companies which we believe would be the beneficiary of the improvement in the rural area. But there are certain other companies like Tata Consumer Products, Godrej Consumer Products, who are playing well on the strategy, both on organic and inorganic front. And I think that will help their earnings to consistently improve in the coming years. So these are some of the picks which we believe will do well in the coming years.
Fair enough. I understand the point that these companies will be beneficiaries of the rural recovery in the second half of the year. But the question is it already in the price right now? Because last 1 month we have seen solid run up. Do you think the valuations are comfortable? And how do these stocks stack on the risk reward basis? What are your top bets?
See, if you look at the valuation and if you look at the indices, how they have moved up in past 2 years, I think HUL, Dabur India or Marico, they have not done well if we compare it with the broader indices. So I think there is some bit of, cream left in these stocks. And we believe that with, improvement, with expected improvement in their performance in the quarters ahead, we should expect these stocks to perform well. In terms of consistent earning growth visibility and in terms of valuation, I think Godrej Consumer Products and Tata Consumer Products looks extremely well, and I think there is an upside from here also in this two stocks. ITC, as we know that valuation are relatively lower compared to what some of the large FMCG companies are. And we are expecting even ITC's non-secret FMCG business to see good performance in the quarters ahead. So I think ITC is also one of the good picks from the valuation point of view.
Would you be interested in getting into some of these value retailers, because they are also kind of proxy to consumer at the bottom end of the pyramid?
Value retailers, yeah. So there are, if we from the retail perspective, or from that angle, if we look, I think Trend is one of the stock which looks good. There are certain stocks, like ABFRL, where the performance is expected to improve in the the quarters, because in the discretionary space, if you look, the premium discretionary has done extremely well, but there were certain categories like footwear, apparels, which didn't do well for last 1.5 years. Now we believe that these are some of the categories which will start seeing a recovery, because last 1.5 years there was not a performance from this company. So we believe that ABFRL, Trend is the we can say that it is the exception in this space, and they have done extremely well, and that is that, and because of that we are seeing in the stock price doing extremely well. But there are certain companies like ABFRL which we believe that would see a good recovery, and whatever acquisitions they have done in the recent past, I think those acquisitions will add value to their performance in the mid to long term. So I think these are some of the companies which we believe would do well.
That note, we'll let you go. Appreciate you making time and speaking with us. Just wanted to put the spotlight on Paytm as well, because that stock is surging as much as 9%. Of course, we got the commentary from the founder, VSS, over the weekend, where he was speaking at one of the events in Delhi. He talked about how they've learned from the mistake and what they should have done differently with respect to the entire, hassle that happened with the RBI earlier. But more importantly, on a positive side, they're talking about an aim to create a $100 billion Indian company. And that's what he said, and it's a personal ambition to make that. He did talk about how listing brings far different and more responsibility, and that's what they have learned, of course, over a period of time, as to how a listed entity is much more different than the startup culture that we have seen. But Kunal, on the charts, Paytm, what would be the advice?
Yeah, I think today's move is quite strong, because it's come back. The stock has come back towards almost a 5-month high for itself, around the 470, 471 mark. That looks like, and in fact, many of the such kind of names, have managed to make a strong comeback in the last couple of days, which were trading significantly below their long-term moving averages. So I'm sensing that it's a phase of the market where the huge underperforming, stocks are making a strong comeback. So maybe a short-term bet could be taken out over here for Paytm. Closer to 500, 525 could be kept as a near-term target for the stock. But I would probably believe that the larger trend for the stock is still on the bearish side. So we may just initially expect that this could just be a rally for Paytm heading towards 500, 525 potentially.
Excellent. We'll take a short break on that note. On the other side of the break, Gurmeet Chadda will also be joining us for discussion on market. Don't go anywhere.
Welcome back. Well, the market continues to be a bit somber. 24,300 for now is being held. Just broken below that mark, but clearly lacking momentum today. It's been a slow start to the week, or at least Mumbai has slowed down today given the kind of rains that we have seen. But in terms of what's really chugging along nicely is the entire railway pack. So RVNL, IRFC, IRCON, these are some of the names which are doing quite well. And Metro Brands is also up 6%. GE Shipping is doing quite well. Paytm we just highlighted. So a lot of these names from the broader markets which are interesting right now. Gurmeet Chadda also joins us on the show. Gurmeet, hi, good to be speaking with you. I'm intrigued to get your views on the entire footwear space. Is there anything you like there? Metro Brands just had a very great start to the day. Today was up 12% to my mind for no reason, but anything that you see?
So we really don't club it basis different categories. We have a lifestyle portfolio. We are an aspirational economy. We believe that once you are in this $3-4 trillion spot and you are moving towards 10 trillion journey, that's when the maximum delta comes in the discretionary spending. So we have travel related plays like Interglobe. We have IRCTC and Investment Universe. We have some of the hotel stocks like Indian Hotels at the upper end and Lemon Tree at the mid affluent end. We have luxury watchmakers like Ethos in the portfolio. Footmakers in particular, Metro, we used to have, but we did some profit booking because of the valuations becoming very, very stretched. So we played in terms of the lifestyle and how the aspirational middle class India is, and playing that rather than just confining ourselves to sub buckets in this category.
Gurmeet, are you also looking at exhibition companies or mall operators as well? Because that is where the aspirational India spends a lot of time.
Completely open to it. Phoenix was one example, but again, Ajay, as you see, the valuation became very, very stretched. So you have to be a little careful here. In fact, now the government has reopened the window for the white goods PLI. Today, so we are tactically took some exposure in some of the consumer durable names, especially the AC makers, with the kind of heat wave we had in the country, whether it was Voltas, whether it was Blue Star. So we are open to that, but I'm more gung-ho on travel and tourism. That looks very, very structural to me. Reason being that, whether you are rich, whether you are middle class, or you are at the lower end, everybody has now started earmarking a certain budget towards travel and leisure. It ranges from 10-15% of your discretionary spending. And I think this will be a huge driver, as we embark this journey over the next few years.
That's a fair point. Anecdotally as well, we have seen that budget allocation over travel getting more and more broad-based these days. But are you open also to put in fresh money to work within the railways ecosystem? Because the stocks continue to rally, but should somebody take a fresh bet just ahead of, budget? Is that a good tactical trade at all?
I think a lot of good news is in the price. So purely from a budget play, I think it's a very risky strategy. In fact, I would avoid taking short-term views on it because people who are new probably doesn't know 2003 to 7. We saw a similar up move in the infra EPC plays, whether it was GMR or Lanco, some of the capital goods name like Punj Lloyds, etc. of the world, and we knew what happened. So once you start, valuing cyclicals like consumer in a bull market, you tend to make a mistake of buying them at very high prices and factoring in all good things. It doesn't mean that all railway stocks are expensive and you should completely stay away from them. I think it's a great 5-10 year story, whether those are wagons, whether especially companies who are getting into now metro coaches. Government recently announced 10,000 non-AC coaches, and we saw a bit of a upsurge today. So it's a huge rally in terms of the entire railway infrastructure getting overhauled. Look at the sheer number of Vande Bharat trains we are going to have over the next 6, 7 years. Second is the replacement opportunity of Shatabdi, Rajdhani, Sampark Kranti, where it would be replaced by Vande Bharat coaches. So I think there is a long-term opportunity here, but immediately for the short term, probably a large part of the space looks very, very stretched to me as far as valuations go.
Yeah, no, that's a very sage advice coming in that you can't value cyclicals the way you do consumption and other, broad-based theories, because these entities or these sectors have a cycle, and for now, at least in the last few years, we haven't seen a down cycle, but that doesn't mean that it will not come, because that's just the nature of some of these sectors. But defense is also one space which has seen massive traction of late, and that's one space which is expected to see increased focus when it comes to budget 2024, which will be out on July 23rd. Let me take it across to my colleague Sumit to get more details as to what we should expect for the defense sector. Sumit?
Well, this time the schemes could be focused more on small companies, small private sector companies. That is one important takeaway that could come in the budget this time. Also, the government is planning to give a big boost to R&D, research and development, when it comes to defense sector, because that is something which is clearly not up to the mark and in which there is a lot of scope. So keeping that in mind, Make in India, more Make in India schemes can be announced. Also, there can be more relaxation when it comes to export of defense equipment, and that can be a new list when it comes to new weapons and products as far as exports are concerned. If we give a overall picture, Indian government has a target of exports worth 50,000 crore rupees by FY29 when it comes to defense sector. Currently is 21,000 crore rupees. In the interim budget this time, the budget was for 6 trillion rupees. The overall the defense sector, if you talk about 6 lakh, so there's a lot of scope for increase in the defense budget, and that's going to be announced this time.
Okay, so that's about the defense sector and the overall push which is expected there. But Nuresh, within the defense pack, is there any stock that you would still advise to buy on the charts, or any stocks that you would want to recommend booking profits into?
So the only stock which still looks promising for the fact is Bharat Electronics. One of the larger companies in the defense pack, one of the oldest one, has had a very strong track record across cycles of the PSUs as well. On the exit poll day, the stock was at 320.25 and then saw a very sharp correction. Most of the other names have gone up 15 to 30% higher than the exit poll days. This stock is up to 3%. So it gave a fresh breakout about 320.25 and still looks promising. So out of all the names, this looks interesting. And in terms of booking profit, it's been a tough call in a lot of defense names. The stocks have continued to do well. So the only way one can book profits is to do it in parts, because the momentum is way stronger than anyone imagined.
One of the themes, Gurmeet, that people are betting on is they're looking at spaces which is just underperformed and hoping these will come back. And one such space has been insurance as well. Had to go through a lot of those regulatory changes, and there was a lot of overhang. Things seems to be stabilizing for now. Would you hazard a bet into insurance?
You got to be selective here and probably differentiate between, let's say, a life and a non-life insurer. I think if you see the June data, there are some green shoots. Even somebody like an LIC has had a 30% APE growth. APE is your annualized premium equivalent, because a lot of policies are also sold as single premium, or where the premiums are upfronted. SDFC Life reported decent set of numbers. The new AP, the fresh business, as well as the AP growth was in upwards of 20%. So I think that's something might see a bit of a recovery from, because it's been stagnant for a while. Similarly, there could be some movement in NBFCs also. Reason being that the cost of funds eventually will start seeing some breather, as the 10-year GSEC is already at 7. Last quarter was 7.18. And a lot of the NBFCs, if you do channel checks, whether those are working capital limits, whether it is LAS, whether it is LAP, a lot of products have seen a spike in the lending rates, as deposit growth becomes difficult to chase. So you would see at some, maybe a lag of 1 quarter, some better numbers from NBFCs. So the quality ones like Bajaj or a Poonawalla or Cholas of the world could see a bit of a movement there. So it makes sense to be a little counter-cyclical. But just because this hasn't done well and should catch up, I think that's a risky trade to take.
Gurmeet, how are you analyzing the auto ancillary space? What kind of names have you exposure to there?
So I think we are very gung-ho. In fact, a large part of our portfolio has been auto and auto. And the interesting thing now is that in last 4 5 years, there's hardly been any capex on the IC engine auto ancillaries. There's been a lot of news on the EV stories and the ethanol stories, etc. But there's hardly been any capex. Plus, the second largest market, which is Ukraine, has seen a huge supply disruption due to the war. China has completely moved to EV with BYD and other brands. So a lot of the traditional guys like the Samvardhana Sumi, which was the erstwhile Motherson Sumi, the Lumax. We already seen a good movement, Uno Minda and Sandhar of the world. So a lot of companies in tooling, fabrications, forgings may actually start doing well. A lot of them are running at 80-90% capacity. It's something like what happened to traditional energy. Everybody was so focused on wind, solar energy that we forgot the traditional energy guys. And then you realize that. So look at, for example, vehicles. Out of 40 lakh cars India sell, 35, 36 lakhs is still the normal petrol and diesel. Only the 10% is your hybrid and the EV option. So I think there is an opportunity there in the near term, which is 12, 18 months. So we have Sona, we have Sanha Technologies, we have Uno Minda, we have evaluating Motherson Sumi, which is Samvardhana Sumi now, and some of the traditional IC engine auto ancillary plays.
Okay, so that's a view coming in quite gung-ho as far as the entire auto and auto ancillary space is concerned. In fact, Gurmeet named one of the companies called Sanha Technologies, and incidentally, we did speak with the management today. Hear out a soundbite as to what they had to tell us earlier.
In terms of explanation, a mechanical lock typically ranges from about 350 rupees to 500 rupees per lock set, while a smart lock goes anywhere from 3,000 rupees to 5,000 rupees plus even beyond. So therefore, with that happening, we could be looking at a revenue from the same product line bringing in anywhere between 8 to 10 times that of revenue as the adoption happens on a mass scale. In our kind of business, I would imagine the optimum margins are about 12.5, 13 odd %. We are still far away from there, but we see a gradual improvement to those levels as we kind of reduce the continuous capacity expansion and capital expenditure. Now that most of the capital expenditure has been done, we would imagine that margins will continue to grow in the future times.
You have analyzed the business model of Sandhar. Today I was talking to the management earlier in the day. Very good growth being guided for the next 12 to 18 months. What about profits? Any idea how well can they do on profitability front?
There's sizable debt reduction, Ajay, on this. Second, they were a single brand, a single product focus a few years back, plus some wrong capital allocation happened. So they were basically making, Hero was the only one of the largest, OEMs they were catering to. Now they have TVS, they've added more brands. Also, locks and mirrors were their proprietary products. So they have a more than 50% market share in locks. Now they've actually moved into, industrial cabins, frames. So if you see the best-selling model of TVS, which is Rider, they make the frame for it, right? And they're getting into smart locks, as you heard the management. So if you see currently the keys we use, they are not really smart. They are more like hybrid. You still have to carry the key inside the car. Otherwise, it doesn't work. The pure smart lock is what something like Tesla, where you can operate from a mobile app. So there is a beta testing going on there. They are making a nice EV-ready portfolio, which includes DC-DC charger and few other setup. So I think it's a play on more content, more features per car. So we are pretty positive as far as the long-term prospects go for Sandhar.
All right, let's do a chart check as well on some of these names which are buzzing in the auto ancillary space. Nuresh, check out Sona BLV and even Forging for that matter. Both are buzzing in trade right now. These two or any other which you like from Auto Anch?
So Sona is the only one which has actually not given a breakout. If you look at everything under the auto ancillary pack, everything is broken out, whether it's a Gabriel or a Minda or a Minda. The whole range is broken out. Out here, if you look at it, the stock for the last almost 2.5 years, every time it has come back to 680, 700 has got resisted. So it's a huge cup and handle formation in the making. So it's a preemptive buy here. I would expect it to eventually break above 700 and go towards 800, 850 possibly. So a good risk reward here. So the only one left where there is still upside in the auto ancillary pack and the risk reward is in favor. Same with the case, Forgings also has moved up a bit in the near term. And also over the last few months, we've seen the whole forging pack do well. So the trend is still up for the sector, but I would still like Sona out of the whole names.
Point taken. So these are some of the recommendations coming in from the Auto Anks vertical. In the meantime, not major buzzers in the last few minutes, but there's just continued momentum on some of the gas names. So ONGC as well as GAIL are two stocks which definitely deserve mention. And RCF has actually now piled down gains of 14%, and FACT is also up 8 to 9%. Remember when we started off the show, they were pretty much flat, then they gained around 2 to 4%, and right now the gains are solid with that move coming in on some of these companies. Time now to take it across to Sharad to get the latest from the dealing rooms. Hi Sharad.
Well, yes, in focus is Sadhana Nitro Cam, and this small cap stock, what we are gathering from dealers is HNI buying is coming. Now, interestingly, the volumes have picked up 7 times its 20-day average, and the stock has hit its 3-month high levels. Now, almost 10 crore rupee worth of shares are there on delivery also, and interestingly, channel checks are suggesting that the company's new expanded capacities in the PAP segment in Maharashtra is expected to go live soon. Expected that it could come in a week or so. Interestingly also, channel check suggests that the anti-dumping duty on paracetamol drug can be expected going ahead, especially the consultation process are still going on, and post the election the street is expecting this announcement might come. Now, why this is important for the company is because this product is a raw material and this would be positive if this is announced. So overall, Sadhana Nitro Cam, what we are gathering from dealers is buying is coming from the HNI segment.
Right. Let's get you some BTST trades as well. Kunal, what are your BTST trades?
So I'll go with 2 buy calls which I'll mention. The first one is about ONGC. That's a chart which is looking attractive yet again above the 300 levels. So buy with a target of 312. Stop loss now trailed to 291. And Godrej Consumers is the other stock which is confirming a pennant formation breakout about the 1400, 1420 mark. So would suggest a buy with 1480 as a target and stop loss at 1400.
Okay, what about you, Naresh? What's the BTST or STBT trade?
So first is a buy on ITC. The stock is trying to make a short-term range breakout, swing highs here. Stop loss at 437, target price of 450 plus. Second is a buy on HDFC Life, a small range breakout here as well. Stop loss at 615, target price of 635.
Point taken. The other focus area of the government perhaps during the Union Budget 2024, which comes out on July 23rd, might be housing. Now, we have heard a lot already from the government on the kind of push that they're doing for affordable housing, but what more should we expect? Let me take it across to my colleague Prakash, who's joining us with more on this story. Hi, Prakash.
Yes, we are learning from our sources that the government is likely to make some big announcement for the housing sector in the upcoming budget. We are given to understand that the special focus would be provided to the affordable housing segment. In fact, the Ministry of Rural Development and the Ministry of Urban Development and Housing Affairs have sent their separate proposal to the Ministry of Finance. We are given to understand that the government is likely to make big allocation under rural and urban housing schemes. As you are aware, that the government has already made an announcement to launch a new housing scheme for urban poor and middle class in the interim budget, but it had not made any financial allocation under this scheme. Along with that, Housing Affairs Ministry and the Ministry of Finance were also working on the modalities which have now been completed. The sources are informing that the government is likely to make big allocation under this scheme, which could be in a range of 50 to 60,000 crore. Since this scheme is meant for urban poor and middle class, therefore, there is a proposal to provide a benefit of interest subvention to the beneficiaries, which could be in a range of 3 to 6%. Sources are also informing that the government is planning to provide financial allocation for construction of additional 3 crore houses across the country. Moving ahead, the sources are also informing that the government is likely to increase the overall financial allocation under PM Awas Yojana Rural by 15 to 20%, which is around 80,000 crore at this point of time. Since various state governments have submitted their separate proposal, and therefore the government is likely to increase the overall allocation under PM Awas Yojana Rural as well.
Right. So that's what my colleague from New Delhi, Prakash, is gathering on budget. But I want to go back on some of the names which are doing well right now. Chemicals, that is a space where increasingly a lot of contra bets are being placed. Gurmeet, have you started nibbling in that completely hated area and ignored for a long time area, or not yet?
Selectively, we In fact, PI is not really a pure chemical name, but we have been holding it for long. It's one of the CDMO names in chemical, if I were to say that. Great innovation rate, in a good wealth creator, and had been a little stagnant. It was available at around sub 3,000, close to 3,000 when one of the news came in of its, one of the key drugs patent expiring, Chinese company setting up facilities. We have Tata Chemical in the portfolio, but that hasn't really done too well since the time we bought it when it was 3 digit when chemical stocks were hammered. It's a play on soda ash, which is one of the key ingredients for glass, which is an end use product in auto and housing, and then it has an agrochemical portfolio and a specialized portfolio. So we are nibbling into something like Deepak Nitrite. We have RP in our radar. We want to see if there is, the complete inventory destocking has happened, and companies who have backward integration are better positioned in the medium term. But we do not have really a very high meaningful exposure. Couple of stocks with low single digit exposures.
Okay, point taken. Gurmeet, the other big theme that people keep talking about is also the data centers, right? GCCs are coming up, data centers are coming up. Any other stocks that you like, which could be a good way to play the sector?
See, there's a very interesting thing about data centers in India. Highest data centers are in a place where real estate is most expensive, which is Mumbai and Thane largely. Reason that it needs 24 hours power supply. You can't have a downtime if you're using a data center, let's say for housing application or an enterprise application. I think a lot of this will start moving towards more geographies. So one is the real estate side of data centers, which a lot of companies have run up. We don't understand that well, so we avoid it. Second is the companies which will power the data centers because you need power. So we have HBL Power in the portfolio. Stock has done very, very well. They make specialized batteries which have applications in data centers. It has application in specialized defense systems. And another advanced player where you need, continuous power supply. Plus, it's also one of the proxy plays in the covered scheme for railways. So that's something we have in the portfolio. We're looking for more opportunities here. And I agree with you that this could be a huge wealth creator, the complete value chain of data center in the next 3-4 years.
Gurmeet, you're fond of eating out. Do you observe any change in volume numbers in some of the places you are stepping down into, say, Restaurant Brand Asia? All these guys were struggling with volumes. But do you see people going back, flocking back?
Oh, they will. As I see, it's a question of, also last couple of quarters, if you see, we had a World Cup, then we had I'm talking about the last year World Cup, not the current one. Then you had a festive season, a very long marriage season, and there were a host of other factors. We like Westlife. Westlife for the reason that the 95% sourcing is domestic, so there's more control over prices as well as the quality because you need to be very consistent here. I think post leadership change, even Jubilance now seems to be sort of making comeback. Although there's a lot of competition in a lot of pizza chains, and their other food portfolio, whether it is biryani, even Poppies, hasn't done too well. So we have Mrs. Vector and Westlife in the portfolio. Mrs. Vector, of course, has done exceedingly well. Westlife is still, in our view, a little excited. And look at Ajay, this thing that if you add all the QSR put together today, all listed QSR, it is less than at which Haldiram is trying to sell the stake. It's all put together like 70,000 crores. So I think it will catch up. I think this entire thing will see the existing ones getting more market share and probably some new ones also coming.
Very interesting way to put it. Haldiram is getting a interest at almost 80,000-90,000 crores. This entire space is available at lower. That's a good way of putting it. By the way, Mrs. Vector is an interesting one because they supply buns and whatnot, and of course a cookie play. So that is something interesting to watch out for. Look at Mrs. Vector now, almost doubled, sitting at a fresh 52-week high. Well, talking of a fresh 52-week high, there's a new 8-month high for ITC coming in. Nuresh, is this almost 470, 480? ITC went down to 400 and has come back today. Is it start of a new trend there?
So it looks very promising if we look at the fact that the stock, everything in the sector has done really well over the last few weeks as well as post elections, etc. This stock has been sideways. And if we look at it, once it sustains 440 mark, which is doing today, it could ideally open up a move all the way to 500 level. So positive on the stock, good price action and confirmation today. So a buy at current levels for the short term as well as for the little medium term view.
Point taken. Gurmeet, one space which was doing fairly well and created quite a bit of wealth for the investors was MFI, right? Microfinances names had seen, kind of multi-bagger kind of scenario where a lot of these stocks had doubled and tripled quite quickly. Now we understand that there are some issues, or at least some, issues cropping up with respect to asset quality, whether it's related to certain areas right now, or RBI being a lot more strict in making sure that they're not going all out with respect to their lending, etc. Is it the time to book out of the microfinance names if one is sitting on profits?
A difficult call to make, but whenever regulator has voiced any concerns, whether it is unsecured loans by fintech, we saw action after that. We saw concerns on gold loans and a lot of cash dispersal happening. We saw some action on IFN and few names. So wherever RBI has voiced concern, it is followed up with some action. And also, you see, Ujjivan started it, where they revised the guidance downwards. Today, RBI mentioned that they want, MFIs to go a little slow on UP and Bihar in particular. So a lot of companies like Fusion, like Credit Access, has a very large portfolio there. So you got to go probably geography-wise, and also there is politics involved whenever there are state elections approaching in terms of loan waivers and all, and that has a broad impact on the overall asset quality. So you could be cautious here. And maybe if you see more dips, go with some who's an industry leader like Credit Access. And if you have that risk appetite, otherwise this space for some time, I think you can look at housing finance, you can look at some of the capital marketplace, and maybe some of the banks right now vis-a-vis financials rather than just bottom fishing here.
So Gurmeet, if I had to corner you and ask you your, top recommendations from the large cap private banks, a PSU bank and a mid-sized bank, which are the three names you'll give me?
ICICI Bank, State Bank of India, and Federal Bank.
So that was clear and emphatic. But if I had to put a similar question to you, Naresh, which are the stocks you would recommend?
In the private banking space or everything else?
Private banking, one name from PSU and one mid-sized bank.
So in private banking, it is ICICI Bank because it's been a clear leader. In the mid cap, it is Federal Bank, which continues to break out. And in PSUs going forward, I think SBI could be the leader.
What, it's 2-on-2 for SBI, ICICI Bank as well as Federal Bank. Kunal, don't make it 3-on-3. Give us a different idea. Or do you think that these three names are really strong?
Yeah, these three names are strong, so I think you'll have to go with the...
What a consensus build-up it is, right? 3-on-3 with respect to all the three names. So, I don't know if it could be more convincing than this, right? But clearly, ICICI Bank, to be honest, has done better than its peers in terms of the performance.
Performance as well as numbers.
The point with charts is it's more consistent. It's not pertaining to any kind of a news flow. HDFC Bank had its own share of news flow. ICICI Bank, without the news flow, also I think has done reasonably well.
Yeah, Gurmeet was talking about Poonawalla. There were some 20 lakh shares worth of block deal which had just happened in Poonawalla. In fact, we saw some blocks as well where the previous MD had liquidated some of the shareholding out there. Gurmeet, you study this name. What are your thoughts now on the valuation and the way things may, some more supply possible here?
There could be a little bit more in the short term, but I think the bulk of the overhang is done with a large block, as you said, of 25 lakh shares coming a couple of weeks back. I think Arvind Kapil, the new MD, has a very good reputation, ex-HDFC guy. We have some very prominent names in the new board as well, and it's backed by a very strong promoter. They have now a AAA rating. So I always say that the cost of funds is your biggest edge when you are the NBFC. I think Poonawalla cost of funds is almost same as Bajaj Finance right now. That tells you that how well they are positioned. The other thing is that you got to be a little lesser aggressive. I think in credit, if you are less aggressive, that holds out in the long run. I think you need a controlled aggression, as we say in cricket terms, in NBFCs. Don't get carried away by 40-50% growth quarter on quarter. In fact, that is a red flag. We've seen that in DHFL, we've seen that in Yes Bank. I don't want to get name specific, but controlled aggression, controlled risk-adjusted growth is what matters. So far, I think it ticks those boxes. Let's see, it's still early days for them. We got lucky when they took over Magna FinCorp and we entered when the price was more like 140, 150. So we have still a lot of cushion in terms of what the price is right now, but looks to be a good franchise. If I were to name top 3, 4, 5 NBFCs in terms of credit quality and future growth, I think it should figure. in that
Okay. But controlled aggression, that's the word coming in. Thanks, Gurmeet, for putting that into perspective. And thanks so much for joining us today. Naresh, Kunal, we let you go as well. But it's time now to take it across to Vinny to get the market close stats. Hi, Vinny.
Absolutely. So seems like today at least the market will be closing recovered from the day's lowest point. So 24,336 levels is what the Nifty 50 will be closing at. Almost 100 points recovery for the Nifty from the day's lowest point. Sensex too, yes, has seen a recovery and will be closing with slight bit of a gain. But it has been quite a range bound in terms of a narrow range where the Sensex as well as the Nifty was moving in. When you look at the broader markets, at the Nifty mid and the small cap, that did nothing exciting today. Nifty mid will be closing with cuts of almost 0.2%, while small cap with cuts of almost 0.1%. So slight bit of that underperformance is what we're seeing for the broader markets. Nifty Bank, that was down almost 0.4% in trade as well today. And Nifty Bank, in terms of the movers that we're seeing coming in, Bank of Baroda was reacting to its numbers. HDFC Bank was not performing anything exciting. We had PNB Bank, which was down and out in trade as well. So yes, overall, not much of an excitement that came in from the banking side. Advance decline ratio today clearly in the favor of decline versus advances. Nifty FMCG, that's the one, and that's the key highlight that we should be talking about today. Nifty FMCG among the top sectorial gainer today, and we had Marico, Dabur, Godrej Consumers, ITC, which was managing to hold on to very strong gains. Britannia also among the names that was buzzing in trade for the Nifty FMCG. What didn't do well was obviously, like I was mentioning, PSU banks was down and out, and other than that, metals also was a bit subdued in trade. So metals is what we're keeping an eye out on. Jindal Steel, Vedanta, Tata Steel, JSW Steel all under pressure, while the railway stocks today managed to hold on to good gains along with PFC and REC. So keeping an eye out on that, but markets managing to see slight bit of a recovery from the day's lowest point, 100 points recovery for the Nifty 50.